This is AHA Business Radio, creating aha moments for business, by business, and about business, providing opportunities to discover information to help you run your business and guide your decision making. The more you know, the better decisions you make. Now, here's your host for AHA Business Radio, Alan Hirsch.
Are there different kinds of deductible based on the risk tolerance and the premium?
Yes, there are. I mean, you're talking about just for product liability or anything now?
Well, it could be anything, but this one in particular.
Well, there's certain things that you can do with an insurance policy for your ability to absorb risk. For instance, you can go with a higher deductible, okay? And every insurance buyer has a different tolerance for that. Some people want to have everything covered by the insurance policy. Some people say, no, I want to go to $1,000, $1,500, or if it's a huge building, maybe $50,000 deductible. A couple reasons for that. One is the higher the deductible, the lower the premium. Secondly, you want to avoid, and this is to all our listeners out there with your homeowners policies too, your personal policies, you want to avoid those nuisance risks. So I always suggest any loss under $1,000, you self-insure. You eat it. Don't do that because it goes before the underwriter. Even though it's only $1,000, if you have a couple of them, then you've got a track record. So depending on what makes you sleep at night, as far as what you can tolerate to absorb, that's how I base the deductible.
Again, this is Alan Hirsch at AHA Business Radio. We are talking insurance with Richard Pohl of Chesapeake Risk Management. One of the things I used to have with my business employees, particularly those that handled money or major assets, was bonding. Would bonding be part of the? Can you explain what bonding is?
Well, bonding is you're talking about your employees. You're talking about what we would call employee dishonesty is one of the ways to look at it, which means if there is a theft, a loss caused by an employee, that coverage picks that up. Of course, the downside on that is, and there's always a downside, is you have to be able to prove it. Because if you can't prove it, they can sue you for false arrest, and that probably in most cases will be greater than the amount of money they stole.
Yeah.
So yes, employee dishonesty is one of the coverages.
I have personally, which is an umbrella policy. How does that fit into the general insurance policies that you'd have in a business? All
right, fine. You were talking about general liability before, which I keep saying is bodily injury or property damage. An umbrella is just that. It is a excess policy over that. Now, on your homeowners or your business or your auto, you have a lower limit. It could be as low as $100,000. It could be $500,000. The umbrella is in increments of $1 million over top of that. And for our listeners out there, if you don't get anything else from this show tonight, go to your agent and talk about an umbrella policy especially for your personal insurance, because if it's a small exposure, let's say you have a house and one or two cars, just a husband and wife, $1 million is going to cost you between $200 and $300, and that is the biggest bang for the buck you can get in insurance. As we say, you do not have to be a millionaire to be sued like one.